What's up, everyone? Today is February 16th. It's a Wednesday. Um, I wanted to go ahead and make another trade recap. I know I made one quite recently, but you know, I tend to make these recap videos when major things have happened in my trading journey. Major lessons are to be learned as well. So that's why I decided to go ahead and make a video for today. I took one trade today. That was NQ, or as I discussed in my previous video, US 100, because I'm trading lots. So I shorted US 100. I basically sold US 100 lots, and it was a losing trade. And I'm completely fine with that because the trade I took today was a phenomenal trade in terms of execution, patience, my thesis, everything revolving the trade was perfect or near perfect. However, the trade just didn't work out, and that's what I really want to go over. Not every single good trade is going to work out. That being said, let's get this video started. Go to a higher time frame first. So what has NQ been doing? I discussed this in the last video as well, which was like 2 days ago. So not much has changed since then, and we are range bound inside of a range bound market. What that means is I have no clue where we're gonna head. That's why I'm trying to trade as objective and be as reactive as possible. Just react to my levels, just react to my zones, because I know it will guarantee me success in the long run. That being said, let's go down to like a 1 hour time frame. Um, Okay, so NQ formed 30-minute demand yesterday from somewhat of a balancing day. We also had this support area right here. If I go to ES, you can probably see it a bit better. ES had this critical area of support, which also aligned up with its 30-minute demand, which it had also created. So my plan was, this demand zone, just looking from a context perspective, did not take us that far. You know, this 30-minute demand right here, really only took us like 30, 40 points higher. So this was not the best zone in terms of strength. So my plan was very simple. If ES broke below its support level and its demand zone, as well as NQ breaking below its demand zone, um, that was the first part of my thesis. That mixed with the fact if there was, relative weakness, then I would go short targeting this demand zone right here. That was my trade idea. This is a very high probability play. I can review the confirmations one more time. So as I said, ES had the support level and it had a demand zone which didn't take us that far. My plan was, if there was momentum towards the downside, if we broke through this demand zone, there's nothing stopping us from hitting 14300, which was the next demand. Same with ES, once we broke the support level and this demand zone with momentum, there's literally nothing stopping us from moving lower. So that was my thesis. So now I'm going to break down the intraday chart, the 5-minute chart, show you my entries and exits. But before I do that, I want everybody to take a second and I want to drop a very important psychological tip. One of the main reasons I'm making this video. Uh, you should always structure your trades in terms of if X then Y. What do I mean by that? Um, so a lot of traders have problems with forcing trades. They have problems with entering trades in areas where they shouldn't. So me personally, I know what guarantees me success is trading near areas of interest. That can be key levels, that can be supply, that can be demand. I like to trade near areas of high interest because the market makes sense to me in those areas. Right here, if I just highlight this box, I have no idea what's going to happen here, nor do I care what's going to happen here. What I care about is what is going to happen near my levels and what's going to happen near my zones. So going back to if X then Y, if X happens, for example, if my confirmations hit, in this case, if ES breaches its support level, if it breaches its demand, if NQ breaches its demand, then I will execute the trade. Then I will go short US 100 lots with a set stop loss and a set target. I see a lot of traders, entering into trades early, jumping into areas where they shouldn't jump into. Um, but why would you do that when you know that that has a lower probability of working out? And obviously the answer to that is emotions. Everybody wants to make money in this game. Um, But if you start thinking in terms of if X then Y, or another way to rephrase that is if you just start thinking in terms of probability, then you are guaranteed success in the long run. Probability wise, if X never occurs, then the chance that then Y is going to happen is very, very low. Then Y has a much, much better chance of working out if X, you know, triggers in the first place. So I'll give you an example of that. Say, uh, say NQ, was selling off, but you wanted to enter like pretty early, like you wanted to enter on this first candle right here, right? Let's look at ES. You have no reason to, go short immediately, because your if X condition, which is, us reaching this key level, us reaching low of day, has not triggered yet. So that makes the play a lower probability trade. So this is kind of leading into my intraday time frames and like intraday entries and exits. I entered slightly before this 5-minute DBD when this candle closed and I started seeing weakness. Just highlight that with the green arrow. So this is where I entered. So this was my then Y. So let's look at the if X's. So if X's, at the same time ES breached the support level. Look at this nice drop below the support level. On top of that, we breached low of day. On top of that, we had these upper wicks. So these were my if X conditions. And because these were met, I executed this Y. So that's the point I really wanted to go over. Only take your trades in an if X then Y format. Really, really make sure you're focusing on probability and not emotions. Um, but once you do execute the trade, the second part is have your set target and have your set stop loss. So I enter right here. My target was all the way down here at 14300. So let's look at that risk to reward. Um, I was personally risking about I was risking 40 points. So right here, 1443. This is where I entered, so 40 points. Where was I risking up to? I was risking up to like right here, which is a pretty reasonable stop loss in my opinion. It gives the trade, like I can hold through all this consolidation. I held through all of this consolidation as well. I ended up stopping right here because my stop loss got hit. I don't overthink it. My stop loss got hit. I'm not holding and hoping for us to reverse lower. My stop loss got hit. I'm out of the trade. Yes, we did end up rolling over eventually, but my stop loss got hit, and I was risking about 40 points to make about 120 points. So around the 3 to more. I think it was more of like 140, 150 points. So it's like a 4 to 1 or 3.5 to 1 risk to reward with partials. It's always important to include your potential partials because um, there's a good chance I may have scaled some halfway and then scaled the rest lower. But that is the entire trade. I know several members took this trade today. I asked and I kept on asking who's still in the short position because I wanted to see who was able to stick to their trading plan and who eventually followed their plan and got stopped out, or is continuing to hold, because some people could have a stop loss at high of day, and if that's the case, then they're still in the trade. Anyways, that's the entire video. If anybody has any other questions, just let me know. Don't be discouraged if you took this trade. I took it as well. Carmine took it as well. Several other good traders took it as well. It's just one of those trades which doesn't work out. And before I end this video, I want to quickly show you an example of a very, very similar setup, us invalidating demand with several other confirmations on Friday. This is Monday, my bad. I'm not going to go into the specifics of this trade, but I'm just going to show you that this was a very, very similar setup right here, where it was very, very similar to the trade I took today, and this trade worked out phenomenally. Here, the risk to reward on this trade was 4 to 1, and if you won on this trade, you would have made 4%. And considering you followed the same exact rules, same exact theses, if you had taken the trade today, you would have lost 1%. Between both of those trades, which were both very high probability trades, you would have been up 3%. So that's what I'm saying. Losses don't matter as long as you're sticking to your plan and as long as you're sticking to a system which guarantees you success in the long run. That being said, I'm going to end the video here. I think it was pretty informative, but if you have any other questions, just hit me up on Discord where I'm the most active, or leave a comment in the YouTube section below, and I will be back to trade tomorrow.